Can a bank really lock you out of your own money without ever telling you why? It sounds almost impossible, doesn't it? You work your whole life, you save, you play by the rules, and then one day the money that's rightfully yours just disappears from your reach. No warning, no phone call, just a red screen that says your account is restricted. Let's understand it through the story of Gary Whitman. Gary sold his house on a Tuesday. By Wednesday morning, he had $42,000 sitting in his checking account. By Wednesday afternoon, he couldn't touch a single dollar of it. There was no letter waiting for him, no courtesy call, just a locked account and a customer service line that kept repeating the same line. We can't discuss the details. Now, before you assume this is some kind of scam story or a hacked account situation, it's not. This is something that happens to completely honest, law-abiding Americans every single day. And here's the part that really gets me. Almost nobody explains why this happens until it's already happened to them. So let's back up a bit. Gary is 68 years old. He'd lived in the same home for over 3 decades. After his wife passed away, he made the decision most of us eventually face. It was time to downsize. He found a smaller condo closer to his son and daughter-in-law, and honestly, the whole process felt like a relief after years of maintaining a house that had gotten too big for one person. The sale itself went smoothly. His real estate attorney wired the proceeds directly into his checking account, the same account he'd banked with for over a decade. His plan was simple, the kind of plan any of us might make. Pay off the condo in cash, put some of the remainder into a CD, and keep the rest as a cushion for retirement. Nothing flashy, nothing risky. And that's what makes this story so important. Gary didn't do anything unusual. He didn't move money between 5 different accounts. He didn't withdraw stacks of cash. He simply let the wire transfer land where his attorney told him it would. To Gary, this felt like the safest, most conservative choice available. Can you blame him? But the very next morning, when he tried to move $10,000 into that CD, the transaction failed. He logged into his online banking and saw a red banner across the top. Account restricted. Please contact us. So he called. After 40 minutes on hold, I'm sure many of you know that feeling all too well, a representative told him the account was under review and that they couldn't share specifics due to policy. Days went by. His mortgage payoff was delayed, his condo closing was suddenly at risk, and Gary had no idea if this was bank fraud, a system error, or something he'd done wrong. Can you imagine the stress of that? Money that's completely yours, completely legal, and you can't get a straight answer about when or if you'll get it back. Here's what Gary didn't know, and honestly what most Americans don't know either. Banks are legally required to monitor accounts for unusual activity under federal anti-money laundering laws. A sudden, large, one-time deposit, even from a completely legitimate source like a home sale, can automatically trigger a fraud or compliance review. And here's the part that catches people off guard the most. Banks are generally not required to tell you why in the moment. They're legally allowed to restrict your access while they verify where the money came from, and they don't have to give you a timeline for when it'll be resolved. Now, I want to be clear about something, because I think this is where a lot of people get the wrong idea. This isn't a punishment, it's not personal, and it's definitely not a sign that you did anything wrong. Banks use automated systems that flag transactions based on patterns, the size of the deposit, the timing, and how it compares to your normal account activity. Think about it this way. A $42,000 deposit landing in an account that usually sees $2,000 or $3,000 a month is exactly the kind of pattern that trips these systems, regardless of whether the money came from a scam or from something as innocent as selling your family home. This process even has a name. It's called a source of funds review. The bank isn't accusing you of anything. They're required, by law, to confirm where large sums of money came from before releasing full access to you. And these reviews can take anywhere from a few days to several weeks depending on the bank and how quickly the right documentation gets into their hands. So what typically triggers this? Large wire transfers, inheritance deposits, home sale proceeds, structured cash deposits, and international transfers, even when every single dollar involved is completely legal. Now, here's the question you're probably asking. What can you actually do about this? What if you're about to receive a large sum yourself from a home sale, an inheritance, or a retirement rollover? Let me walk you through it. First, call your bank before the deposit lands. Let them know the amount, the source, and the expected date. Many banks will flag the account internally as expected activity, and that simple phone call can prevent an automatic freeze before it ever starts. Second, keep your documentation ready. Closing statements, wire confirmations, attorney letters, all of it. If a hold does happen, having these on hand can shrink a review from weeks down to just a few days. Third, if you're dealing with a very large sum, it's worth asking your bank or financial advisor whether splitting the funds across accounts or institutions makes sense. This isn't just about avoiding a freeze, it also matters for staying within FDIC insurance limits. Fourth, know your rights. If your account gets frozen, you can ask for a supervisor and request a timeline in writing. And if the bank is unresponsive for an unreasonable length of time, you have the right to file a complaint with the Consumer Protection Bureau. And here's one mistake I really want you to avoid. Don't panic and try to yank the money out to another bank the second you see a hold. Rapid movement of funds during an active review can actually make the flag worse, not better. I know that feels counterintuitive when your instinct is to protect your money, but patience here genuinely serves you better. So what happened to Gary? It took 9 days and 3 phone calls before the bank fully released his funds. Once he provided his closing statement and his attorney's contact information, the hold was lifted within 48 hours. He didn't lose a single dollar, but he came dangerously close to missing his condo closing deadline. And it's a stress he says he never wants to go through again. And honestly, that's the real lesson here. This isn't a story about a bank being the villain. It's a story about being unprepared for a rule that most of us never even knew existed. So let's bring it all together. The key lesson: large, unexpected deposits, even completely legal ones, can trigger automatic bank holds under federal compliance rules. The biggest mistake people make is assuming a large, legitimate deposit is automatically safe just because the money's legal. The bank doesn't know that automatically. They have to verify it first. So here's your action checklist. Call your bank before a large deposit lands. Keep your source documents ready. Don't panic transfer your funds during a hold. And remember, you can always request a supervisor and a written timeline. If you're planning to sell a home, receive an inheritance, or roll over a retirement account sometime this year, do yourself a favor and make that call to your bank first. It really could save you days of stress over money that was always 100% yours to begin with.